Hi, my name is Marc Chapman, manager of the HI Principia European Equity Fund. Looking at the month of March, we see the index recovering slightly, and this was generally driven by a more dovish tone from the Federal Reserve in the US. The fact that interest rates are going to be on hold for a while has basically given momentum to long duration sectors. So we see performance coming from sectors such as healthcare and utilities, while more cyclical sectors such as automotive and industrial were more struggling over the month. In terms of the actual fund, the NAV was about stable over that month, and this came from the positive contributors on a stock-specific basis being offset by negative ones. No particular theme driving the performance. On the long side, we would highlight SimCorp in Denmark, which we think is a still good long stock. The company is a leader in software for asset management. The asset management sector itself is becoming more competitive. There's fee pressure, and gains from scale can only be accrued to companies investing well into IT. SimCorp provides the backbone technology for asset managers around the world to enable them to adapt to the changing environment. Order intake fluctuated during 2018, but has now started to recover again. And in fact, we think more difficult marketplaces will help accelerate the investment and benefit the company. Other beneficiaries were Ubisoft, well positioned in gaming, which is a fast growing sector. They have a large number of AAA games, which will help drive the revenue and earnings midterm, as well as extra investments in digital, which benefit the margin. On the negative side, Delivery Hero performed badly during the month. That was due to a threat of increased competition in their core Middle Eastern markets. We consider that this threat has been overdone, and at the current valuation level, the stock's very attractive for a company which can grow at more than 20% for a long time. Overall, long and short side, we see 30% upside overall to our long book and 10% downside to our short book. Risk reward, we think, is slightly skewed to the upside, although a lot of the positive factors which have driven the market have now been appreciated. For instance, the fact that a hard Brexit is receding, and also the fact that China-US relations seem to be improving. But still, we see risk reward slightly positive, and in particular in cyclical areas such as resources and automotive, there may be some value given the sell-off recently. We maintain gross exposure of approximately 130% and a moderate net exposure, so no strong directionality. Thank you very much.